Ladies and gentlemen, welcome to our weekly investor update. I'm your host, Rachel Curlew, AVP of Investment Banking. We're happy to be back to bring you another insightful investor update. Joining me today is Asha Smelly, Assistant Manager Sales, and my co-host for today. Glad to have you, Asha.
Good to be back, Rachel.
Today we'll be discussing Grace Kennedy Group and Wigton Wind Farm Limited, and we're excited to dive into these insights with you. If you like the content, don't forget to hit like and share this video. If this is your first time here, then be sure to subscribe and hit the bell to receive all notifications. We upload content like this once per week. Also, if you want to embark on your first investment journey, you should take that first step with Mayberry. Follow us on social media to learn more about how you can get started today. So, I'll start with Wigton and then I'll pass on to Asha to dive into GK. Just a quick recap. Wigton is the largest renewable energy company in Jamaica with a market cap of just about $12.5 billion. We took this company public 5 years ago at an IPO price of 50 cents. And today we're seeing here where the stock is trading at $1.13. So that's almost 2.5 times on your investment if you're still holding the stock. Also, a little disclaimer, Mayberry is the largest shareholder, owning 10% of its ordinary shares. So, again, Wigton is trading at $1.13 with a corresponding PE of 42 times, which is above the main market PE of 8 times. So, let's see what's driving this rich pricing that we're seeing. For the full year 2023, Wigton reported a 16% decline in revenues from 1.5 billion down from 1.8 billion the prior year. This decline resulted from a change in the wind regime and weather patterns. We'll want to watch this over the next few quarters, but we do expect that the wind regime will pick up in the next few quarters. Cost of sales, however, went up by 18% to close the period at 753 million. This was primarily due to increased repair and maintenance costs in relation to their phase 1 plant, which is now 20 years old. So they are in discussions with the OUR to replace this plant. So we believe these repairs and maintenance costs will trend downwards once they replace this old machine. Other income remained relatively flat at 260 million, while general expenses increased 24%. This increase resulted from inflationary pressures, an increase in insurance costs, and in particular, salary costs. After factoring finance expenses and a huge reduction on taxation charges, taxation was actually reduced from 33% to 25%, which allowed the company to book net profits of 490 million, a 3% decline relative to a profit of 503 million for the same period last year. If we look on the next slide, we are seeing where Q3 profits are lower relative to Q3 profits last year, but we have acknowledged this was as a result of weather patterns, which we will continue to watch over time, but we do expect the wind regime to pick up back in the next quarters. So if we go back to the first slide, we can also see that their balance sheet still remains robust with an asset base of 10 billion, shareholders' equity of 4.9 billion, and liabilities of just about 5 billion. The market stats table does show that the stock is trading at a PE of 42 times relative to earnings, which may suggest the stock is either overvalued or the market is just simply pricing future earnings into the mix. Wigton is the largest renewable energy company in Jamaica, which places them in a great position to extend existing contracts along with entering into new contracts as Jamaica aims to reach 50% renewables by 2030. In fact, there was a 100 megawatt RFP out this month, and we understand that Wigton should have a very competitive bid. So we do look forward to hearing those results. It's important to note that no single entity can be awarded more than 50 megawatts. Wigton's capacity is currently at 63 megawatts, So if they should win this bid, which is capped at 50 megawatts, we will easily see that Wheaton can increase their capacity by more than 50% if we do the math here. So again, investors are perhaps factoring in this potential increase in revenues in the pricing that we're seeing. Also, the GPE has further announced its intention to put out another RFP for renewable energies by the end of 2024. This time it will be for 168 megawatts. We do expect the same 50 megawatt constraint to be applicable here, but outside of that, I don't see why Wheaton can't position itself to win this bid. Just a reminder as well that Jamaica is targeting 50% renewable energy by 2030. This is a little aggressive, but it would require at least 400 megawatts of additional renewable energy projects over the next 6 years if we are to meet this 50% target. Today, we are just about 12% renewable energy, so it's clear we have quite a few bids to go, and Wigton is well positioned to win several of these bids. They have $3.5 billion of cash on their balance sheet, coupled with the fact that they're the largest and most experienced renewable energy independent power plant in the English-speaking Caribbean. So it's clear again that they're well positioned to win some of these bids. So just to quantify everything I've said here, Wigton could triple its capacity and in extension its revenues and profitability over the next 6 years. The company currently operates with very low leverage, has strong operating cash flows, and is one of only 2 listed companies that is active in the renewable energy space. So we believe the medium to long-term growth prospects are great. The managing director's position is now open, and the 10% shareholder cap has just been removed, paving the way for strategic partnerships. So all in all, the future looks bright for Wigton. I've said a lot. What are your thoughts, Asho?
I think you accurately covered our outlook on Wigton, Rachel. So it is now up to the investors to decide if this is a company that they'd like to add to their portfolio.
Thanks for that, Asho. All right, I'll hand over to you now to discuss GK.
Thanks for that, Rachel. Let's dive into Grace Kennedy Limited. So GK, with dual listings on the stock exchanges of Jamaica and Trinidad and Tobago, has strong history in Jamaica, having opened its doors in 1922. GK is the parent company of a group of subsidiaries operating mainly in the food trading and financial services industry, and is one of the Caribbean's largest conglomerates. The group's operations are structured into 2 divisions. GK Foods Division has a notable presence in Jamaica, broader Caribbean, as well as Central and North America, and extends its reach to UK, Africa, and various European countries. Under the foods umbrella includes high-low supermarket chain, manufacturing facilities, and procurement, warehousing, and distribution across all retail channels in Jamaica of a diversified group of international brands of food and non-food products that we know and love, namely Procter & Gamble, whose line of products are some of the most recognizable fast-moving consumer goods, with household names such as Charmin, Bounty, and the Pampers brand. The financial group segment provides commercial, investment banking, remittance, cambio, payment services, and a range of insurance services to include general and health insurance. And just to name a few companies under this segment, we have First Global Bank. They are the distributors of Western Union in Jamaica and 5 other Caribbean territories, as well as FX Trader, to name a few. For the year ended December 2023, GK recorded revenues of 155 billion, a 9.5% increase over 2022. Profit before other income saw an 18% hike, while profits from operations rose by 13%, ending the year at 11.6 billion. Returns from investments in associates and other joint ventures also experienced healthy growth. GK closed the year with net profits attributable to shareholders increasing by 10% to 7.8 billion and earnings per share of $7.82. GK's balance sheet remains strong, with total assets increasing by 12% to 219 billion and improvements in shareholders' equity of 9%, rounding out at 79 billion. So let's take a look at quarterly profits. For the 12 quarters being analyzed, Q1 2021 to Q4 2023, GK's quarterly profit movement speaks well to the company and its operations. The profit movements highlights patterns of higher sales of GK products locally despite the high inflation environment and net improvements in group-wide operational efficiency. Given its diversified revenue stream, we note the seasonality that may impact profitability as seen annually over the third quarter, which then rebounds in Q4. With the goal to earn 70% of its revenues outside of Jamaica by 2030, the current revenue composition reveals a dominant Jamaican market influence, contributing about 55% of total revenue, and is complemented by the growing North American market, which currently contributes 26% of total revenue. We do expect that GK will maintain long-term profitability and continue to see increases in net profit in the short to medium term. Now moving to the stock price history of the company. The stock price history of GK reflects a peak in 2022, trading at a high of $114, followed by a downward trend in keeping with the current market conditions and overall sentiment towards the equities market, which sees the stock currently trading at $72.97. So despite the fall in stock price, we note this as a good entry point for value investors. GK continues to provide shareholders with an average quarterly dividend of 50 cents per share and paid to its stockholders a combined total of $2.17 per share for 2023. The outlook for GK is optimistic as the company continues to execute on its growth strategy of mergers and acquisitions, evidenced by the acquisition of Scotia Insurance Caribbean Limited in March last year, which bodes well for bolstering GKFG's footprint across the Caribbean in the insurance space. The company has also doubled its stake in Catherine's Peak from 35% to 70%. This move complements its 100% acquisition earlier last year as well of Unibev Limited, which specializes in fully integrated spring water production. These strategic moves solidifies GK's presence in Jamaica's spring water market, also noting its ownership of the 876 brand. So as you can see, GK is the dominant player in the water market in Jamaica. GK continues to execute on its M&A strategy, with the most recent being the increase in its ownership stake of Spirituary Spices to 20.18%, which is now recognized as an associate of the conglomerate. So with a PE ratio of 9.33 times compared to an average sector PE of 15.9 times, improvement in operational efficiencies, a strong M&A pipeline, and continued growth in profits, GK is a great stock that you can consider adding to your portfolio at this time. So we've just covered a lot of information regarding GK. Rachel, what are your thoughts on the company's outlook?
I think it's a great company, Asha. It was actually one of the first stocks I bought when I started investments. So it's a solid company, great brand recognition locally and with the diaspora. It's a company we can all relate to, especially the food services, as we consume most of their products. It's a big conglomerate, but despite its size, they're still executing a strategy for growth. And we saw this when they acquired, as you mentioned, the additional stake in Spur3, Catherine's Peak, and Unibev. They have officially reached their US 1 billion achievement, so that's impressive. I think it's a great stock. We all predict the market is going to bounce back soon, so this stock is easily at $19.95 stock. So I think we should all take advantage of the opportunity that we're seeing here today. That's it for today's discussion, everyone. We discussed two great companies, Wigton and GK. I'd like to thank our viewers for tuning in today. Your support is always appreciated. I'd like to thank my co-host, panelist Asha, for contributing to today's discussion. If you're curious about updates on our virtual investor forum and updates, then find us on social media. We share our live stream dates and upcoming guests on our official social media pages. Give us a follow and stay on top of all things forum related. Also, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Keep safe and remember, wise investors, slow and steady win the race. Thank you.